Andrew Stafford, President of Prevail, back with Carrie Loyne, our CEO. A lot of great topics this week. Carrie, we've hit on the markets a little bit. Let's dive into what's going on with government cuts in expenses, cuts in jobs, all of those different areas that are kind of making headlines right now. What do you think the impact is, and how do we play that when we're investing?
Well, first thing to say is we have never been here before. I can't think of a time in all the years, because I am at 39 years in the investment business in one way or fashion, to have us cutting the amount of jobs in the government. And by the way, we'll look at that good and bad. So if we end up with 300,000, 400,000, 500,000 jobs cut, you're going to have some employment issues, at least probably in the next quarter.
Initial blip. Yep.
But realize we're in a labor shortage
elsewhere.
Mm-hmm. So I think when it washes out, I don't really think that's a big deal. I think they go from probably being government employees to private employees, is what most of what you're reading, if that's correct. I think you end up having a lot of money not being spent, probably in excess, and I don't think any taxpayer doesn't want their money wasted. Now, this is not a political discussion, pick your side. Sure. Most taxpayers want to believe their money's being used in an efficient way, and I think we're feeling that's not necessarily how it's going. Now, you get past that, a couple things go with it, right? We're entering into things we care about, which is earnings season.
Right.
So you get to the end of Q1, you're 30 to 45 days later, where we find out how our company's doing. Now, the stock market itself doesn't really provide that feedback or indication, because they may be doing fine. We just don't know. Now, so on the consumer side, you've already seen some contraction there. Moves from, for example, grocery stores from name brands to generic brands, right, or buying less of this or more of that. That's kind of already happened. So I don't expect a lot of things, but there's some promising reports come out. Today was another one.
Yep.
So I just think that there's some pretty good upside, depending on the backdrop of the things that we can't control.
Right. Well, and you got two wars still going on, which is in that area of what we can't control. That needs to be effectively dealt with. The other thing that I want to hit on real quick is we've talked about debt for a long time here organizationally and the national debt. I think that when you say most of people are looking at a government efficient, it's good that they're finally getting spending under control. How do you think we can play that? Because interest rates seem to maybe be leveling out.
So I'm a little bit torn on that.
Okay.
From all of our real estate businesses and opportunities, I really thought at the end of the year I'd watch rates potentially drop. Now, by the way, rates and spreads are two different things.
Right.
Let's just talk rates for a minute. I thought we'd see them maybe 50, 75 basis points. There's no need today for them to drop rates at all.
Right.
In terms of their targets, they're pretty well there. So then it gets down to questions, what does it do? Our country cannot maintain the debt rating or the amount of debt that we're carrying. Now, this is dated information, but for another thing that we were doing 3 years ago, I took our population, divided by the national debt, and in that era, it was about $160,000 of debt for every citizen in the United States.
Right.
Which I even had a hard time processing.
It's hard to comprehend.
So that's the thing economically that I believe is our biggest threat. We've got to bring down that expense, and it is such a huge part, and especially if interest rates don't change, we're allocating a much bigger percentage to pay the interest on the debt. Right. So to me, that's my concern. It's the debt deficit, which looks better with the things that we're doing, and our country staying strong, which I think will feed down to the markets and the other things that we look at today.
And a reallocation of the workforce, maybe from the government back to the private sector.
Absolutely, which I think is a positive thing.
Very good. If you want to learn more, subscribe.